You know, everyone wants to know how to time the real estate market because guess what? If you do it right, you get rich. If you do it wrong, you lose all your time and you lose all your money.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
You know, in life, some things are easy to time, other things are harder. For example, the housing market, really easy to time. When your baby's gonna poop, barf on you, right in your lap, right down your mouth, you don't always know that. On a more serious note, think about the stock market. Now the smartest people on the planet freaking can't time that one. You gotta play like the long game if you wanna do that one intelligently. Real estate, on the other hand, oh my gosh, so freaking predictable. And if you don't believe me, just watch today's short video because I'm gonna show you how I've been timing it now for nearly the last 2 decades and why I keep making bigger and bigger fortunes and how you should too. You know, when we talk about the market, everyone always thinks, oh, this must be the stock market. It's like going to Vegas and rolling the die and wondering, man, what's gonna happen? But you have to understand that real estate and the stock market, they're not the same thing. In fact, when the market crashes, you have to ask, are we talking about the real estate market or are we talking about the stock market? Because only 2 out of 5 times do they actually coincide with each other. Real estate, however, becomes super predictable because it moves in seasons, as in like it goes from winter to spring to summer to fall. It always moves in this order and it will never skip around. Just like weather cycles, real estate has its seasons as well. Whether it's a positive or negative economic climate, real estate investors can deploy winning strategies. The key to timing the real estate market is to always be ready with a strategy that accommodates whatever market you're facing, whether it's a buyer's market or a seller's market. A savvy real estate investor prepares for any scenario, good or bad. But on top of that, the really good investors are counter-cyclical. That means that when everyone is buying, you might want to consider selling. And when everyone is selling, you may want to consider buying. So here's what I want to do. I want to show you the way the market actually moves. I want to show you why it's so predictable. Check this out. We know that real estate over time continues going up, right? I mean, since 1965, we've tracked that on average, the market goes up 4.6+% every single year. But it doesn't really go up like that. And yet it doesn't look like the stock market that's all wild and crazy. Real estate, when you take a look at the graph of it, it actually looks more like this. The market will go up, and it'll get a high point and all of a sudden there will be a fierce drop. And then the market will build momentum and come back up, and then there will be a fierce drop. And then every 4th cycle, the market comes back up really high, and then boom, when it crashes really hard. Well, there are names for the different cycles that you see right here. And if you understand these 4 cycles, and if you understand which one we're in, then you can rig the system and win. The first phase is called recovery. This is the first phase following a recessionary period. High vacancy rates, low prices permeate the real estate markets, and if timed correctly, low-priced assets can be scooped up at a massive discount. This is challenging as the recovering period still feels like the recession, and there's a lot of people that are like, this is way too big of a gamble. So look at the chart here. Notice that we have this drop right here, and we start moving into this recovery period. This is one of the most intelligent times to buy real estate because you're going to purchase it at a very low price. In fact, if this middle line right here represents what the average price of real estate should be growing at, and you can buy it significantly below, then just know that in time, people are gonna make babies, and then they're gonna say, we need more houses, and there's more people moving to this country or this part of the world or this state, and all of a sudden they're gonna say, we need houses, and when that time comes, there will always be a correction during this period of time. This is one of my all-time favorite times to buy real estate. Do you remember the global financial crisis of 2008? Like, it was pure mayhem. It was crazy, blood in the streets. People literally, these housing prices had gotten so jacked up so high, and they were doing all these heartbeat loans, and you can fog a mirror, we'll give you a mortgage, and all of a sudden 0% down, blah, blah, blah. When it all came crashing down in 2008, in October, I remember what happened. Banks started going out of business overnight. All of a sudden, all these properties, foreclosures started going back to the banks. The banks couldn't handle the amount of foreclosures that they had, so they would go under. And everyone freaked out and everyone lost their crap. But you know what? I started buying homes like crazy. Are you kidding me? I was like a kid in a candy store.
I come in peace.
These beautiful homes in Phoenix that, for example, I've been selling for like $350,000, $400,000. They were way overpriced. I started buying them for $80,000, $100,000, $120,000. And I knew that once the market stabilized and caught back up and we started running out of houses again, those houses, maybe they wouldn't go back up to $300,000 and $400,000, but they would have to at least go all the way up to what it cost to build a house. And in most situations, there was more than $100,000 of equity to gain. You know, when you're making $100,000 on a house, small little baby house, how many houses do you need to do to become a millionaire? Buy 10 houses, make $100,000 on each one of them, 100 grand, 10 houses, that's $1 million. That's how easy it was to make money, which is why within 5 years after that initial recovery period, my investors cleared over $100 million in gains. They did it because of phase 2 expansion, which means this. This is where the economy grows and housing is balanced between supply and demand. Investors are typically active during this phase as economic confidence grows. Or if you take a look at it right here, it's like, okay, here was our recovery period, but watch this expansion right now. Expansion is this next phase right here where it's like, all right, we've recovered to this point where if this is right here, this intersection is what it costs to build a house, we've now gotten to the point where we didn't build for so many years and there's this pent-up demand, people making babies and households forming and people saying, I want to move back into my house, and people are moving in and immigration laws change and all of a sudden we have all these people. Remember, when population goes up, people need houses. So guess what? We start building more houses than just what it costs to build them. That drives the prices higher and higher and higher. It is during this period of time that investors can also make a lot of money, but you're starting to get into dangerous territory. The third phase is going to be in color red for warning. There could be blood coming up soon. This is called hypersupply. This is where we see massive amounts of housing stock coming on the market, moving from a balanced market to one characterized by peak housing prices, right? The prices keep jumping up. We may be in this type of real estate phase shortly where prices start rising. The real opportunity here is to take some money off the table by liquidating some assets, particularly your poorly producing properties or ones with larger capital expenditures on the horizon. And here's why. Look at where we're at in this market. This little phase right here is like, yo, we are approaching a cliff and all the lemmings are coming and charging up. And I'll tell you something that's happening. See this blue line? When it is the best time to buy real estate, nobody is buying real estate except the experts that are counter-cyclical saying, duh, this is clearly the best time. Then at green is when normal people get involved and they're like, okay, well, you know, maybe we should play the market. Look at all the blue people making money. And then the red, you know who those are? Those are the idiots and the skeptics and the pessimists. Eventually like, oh, I missed it again and the prices went up $50,000, went up $80,000. I missed the green and the blue. Well, I'm getting in on red. You know, funny thing about skeptics and pessimists is they make decisions so they can keep getting spanked.
Oh my.
And this, my friend, is going to lead us to a recession. And this is what it is. Typically, this real estate cycle involves overinflated growth with rental and real estate prices dropping significantly. High unemployment, and obviously businesses, they're struggling. And that's because we are in this phase right here. Watch. It hits down. By the way, do you see how sheer it is? It didn't take time to build. It's because when the market drops, it literally feels like it's overnight. It doesn't drop for months usually. It's like, it happens overnight. And when it happens, boom, you bottom out and it's like, wait a second, what is the value of a property worth? It's worth what someone's willing to pay. And when no one's willing to pay, then it has no worth. The market just comes to a total standstill. Now you've got to be wondering, like, where are we right now? Well, hold your horses. I'm going to answer that. But look at what's happening right here. You've heard of buyer's markets and you've heard of seller's markets. When the market is dropping, this is now a buyer's market. It means that it's the best time to buy the best deals. When it's a seller's market, it's because the prices are going up. And the higher they go, it's like, oh my gosh, like sellers are like, we weren't even thinking of selling. Let's sell our house because we're just going to make a pile of money. Is that happening in today's market right now? Yes, that's exactly what's happening, except what we're experiencing is freaking weird. Because on the one hand, some businesses are booming, some are struggling, everyone's confused because of this crazy pandemic, and you've got to ask, where are we at in the cycle, Kris, then? And I'm gonna give you the answer right now. The answer has to do with inventory. When we talk about supply and demand, we have a demand from the market right now for this. Kris, we need 4 million homes. But how many homes do we have? Well, they want 4 million and we have like none. So this is a historic problem. It's never been this big before. We've never had a demand for this many houses before. And you can watch my other videos to figure out why and how people wanting to work from home and why the home life is becoming the thing. But you got to understand, like if we deploy all builders in this country and go like as hard as we can, build, in a decade, we still may not be able to solve for the missing 4 million homes. And you know what the whole principle of scarcity is? When people want something and there's not enough, what does it do to the price? It jacks up the price. You've got to be wondering, Kris, in the last 12 months, in the last 18 months, how come the median home price has surged $150,000 north? And is it going to keep happening? Yes, it is going to keep going up. This problem is not going away. So when you want to know where we're at in the cycle, I will show you exactly where we are. When 2008 hit, it's because we had too many houses. And when there's not people that want those houses and a home is only worth what someone's willing to pay, so no one's willing to pay, that's when the prices dropped like dramatically. And that lasted, frankly, for about 7 years. It took 7 years to eat through the foreclosures. It took 7 years for us to make babies, catch up, and let population increase to start saying, hey, we need some house again. And all of a sudden, they started going through the inventory that the banks had. I started tracking inventory very, very closely in 2015. By then, we were missing 500,000 homes. We were really far behind. And so all of a sudden, everyone started building again. But with every month, 500,000 the next month grew to 600,000. Then we were missing 700,000 homes. Then we were missing 750,000 homes. The number kept going up and up and up. And right before the pandemic, we got to where we were missing over 2 million homes. In other words, we couldn't build them fast enough for how population was increasing. But it doubled from 2 million to 4 million when people said, screw this, I want to work from home, I need a different home, let's get a bigger home, a different home, a work home, and a private place where we can live, raise a family, or do whatever it is we do. So you want to know where we're at in this game? I'm going to show you right now. Come here. On the one hand, our prices are hitting a fever pitch high. But on the other hand, we have a supply problem like we're all the way down here. We also know we can't solve for the 4 million in less than at least 5, 6, 7 years. So we're going to see prices go through a historic high before they come down. Now, if you're wise and you know what you're doing in the game of real estate, you can make money here, you can make money in green, you can make money in red. But generally, I play the market hard in blue and green, and I have a proprietary strategy that most people don't use. That means that I'm always making money in real estate no matter what. Like I love blue, I love green, I love red, I love black, I love it all. And I document all of it in this right here. This is called Krohn Consortium. It's where I track my last several thousand homes, basically $1 billion worth of real estate. You can even see some of the graphs in here that we were talking about today. And guess what? This shows you the addresses and everything that I've been doing that allows me to take a small amount of money. You know, someone works hard for a decade. They put $50,000 in a 401k and IRA, or if you own a home, you have equity. But I show people how to take $50,000 and over a 20-year period, I can show them how to turn that literally into 4.3 potential $1 million. And millions is something you can retire on. But because of this amazing thing happening right here, it's no longer a 20-year game. It literally cuts it in half and could end up being more like 10 years. So if you've ever wanted to make millions of dollars in the game of real estate and you're wondering whether you should be playing the game right now, you should click the link below, get this document. I will give it to you for free. Click below, cover the shipping and handling, and when I send it to you, it will reveal exactly how you can copycat my system and do the same thing. It'll even give you access to a phone call with my team to see if you want me to do it for you as my partner. Click the link, learn more. I've just shown you how out of control this market is right now, and yet I'm more excited because this is my once in a lifetime, this is once in a century opportunity to get in on a market like this. And yet you might be wondering, wait, Kris, haven't I already been priced out of the market? Like the prices keep going, I'm out of the game. I can't afford houses like that. If that's your worry, click this video. Let me show you how you still can. Funny thing, people want to know how to time the real estate market. Check out what I just picked up. Damn it, let's do it again. Just dropped it on the ground. Yeah. You ready?